Good deal. This is Rick Rock at Real Fridays, along with one of the three co-hosts. Jeremy Potter, brought to you logging in through the Rust Belt there in Detroit,
Next
and
belt.
or the next belt. I literally in my head said to myself, "Don't say the word Rust Belt," and then all of a sudden it
That's how
happens.
you end up saying it. Don't worry about it.
No, the next belt. No, and it's
We will make America Detroit again.
and then Jeremy, and then Brock Cassidy, who is unusually late today. This is really a reverse. This is a new. It must be election season. It's time for new administrations, time for new behaviors, new
I don't
habits.
think I've ever been called late when I joined at 12:30 before 12:31.
Well, Jeremy
I'm
was
throwing
on
everything off. I'm throwing everything off, Brock.
what's interesting? Talking about the next belt, you had I think it was an article that you had posted on LinkedIn, Jeremy, regarding some new housing developments that were. Was it in downtown? Was it downtown Detroit, or what neighborhood in Detroit? And what makes that particular housing development like unique? Are they prefab houses? Are they? Because it. Go ahead.
Yeah, new construction in Detroit that isn't luxury condos is relatively new. There's been some big multifamily developments, some even like restoration type projects, and especially in like Brush Park, City Modern comes to mind. But what was unique about this was we tried to do affordable single family, and I use the word affordable there because I want to sort of highlight the price point. But the reality is, it's mid market, it's attainable housing. A lot of times, affordable, you get all confused in housing between capital A affordable and just practically affordable. And so for these, we went with attainable, which means they're going to be listed in a community land trust at about $300,000 or less for a single family home, new build. And they were all factory built. Now, we got a grant from Dan Gilbert's Family Foundation to and the reason that one of the reasons the grant was really powerful was it allowed us to order individual homes from a variety of manufacturers to show the city residents, neighbors, policymakers, and politicians, as well as other developers, what are the different varieties and how you can actually make a cool, modern, designed house in a factory. It would have been even more cost effective to order all of them from one manufacturer because then you get the scale and the volume. But what we were trying to do was showcase this technology and showcase the variety so that we can prompt then developers and others to come in and get an ecosystem going. So we had about 4 manufacturers so far. I think we're going to have a 5th on a couple of the additional units, and 7.
Are they all local, like Michigan-based manufacturers of these homes?
Michigan does have one of the manufacturers. The others came from places like Pennsylvania, Tennessee, and Indiana, where manufactured housing, modular or factory-built housing has been has a longer history.
Yeah.
One of my goals is to recruit a new factory to Detroit. A good friend of mine is Laura Graneman. She is the executive director of both the Gilbert Family Foundation and the Rocket Community Fund. And in her remarks, she basically said the thing that she and I have believed for a long time, which is Detroit put everyone in a car 100 years ago. Detroit should put everyone in a house 100 years later today. And so we have the factory space. We have the high-tech industry. We got labor here. We can do it. And so we're really trying to recruit. Come to Detroit, see our facilities, move your factory here. Let's build some houses.
I love it. I think that's a remarkable testament to just innovation in housing, sort of by itself. I think I'm not sure why when Brock goes away, my picture shows up, but that is the strangest thing. I've never seen that.
I love it because I just want to believe that Brock uses your headshot periodically. Anyway, keep going.
But what's interesting is there a unique innovation with how they're manufacturing these homes? Because I see a lot of the 3D printing stuff that's coming out of Northern California, as well as I think there's a large scale 3D printing company that's in Charlotte, North Carolina.
Oh, Texas too.
In Texas, there's these sort of fabrication hubs that are beginning to emerge. I just don't know why sort of the concrete fabrication 3D printing sort of these companies. I don't know why. Is it purely funding that is the main barrier, or why this seems like a pretty quick, easy, or not, maybe not easy, but a fairly quick and implementable solution. You know,
Yeah.
but I don't see it
Let me
deployed to the degree that
so
I should.
stop me if I get too like down the crazy path here of all the different varieties, but I'll say this. Today, the ability to build a home in a factory, even if you're building it with all the same materials in all the same ways that you would build it on site. So it's a stick-built home, lumber, shingled roof, the whole 9 yards. It's just built in a factory in a more standardized way. We believe, and what we've seen from a lot of our manufacturers, is it's about a 30% savings on time and resources. So meaning like the literal cost of waste, the cost of transportation, stuff like that. So some of that 30% gets eaten up in land acquisition, permitting, and other kind of site-specific issues. But there is just a efficiency advantage out of the gate that's somewhere in that neighborhood. Call it 25%, 30%, 33%, something like that, for just building with wood, lumber, in the same way you always would build trusses and everything. Then you have robotics and additional other efficiencies coming in, whether that's metal paneling, wall paneling, certain types of metal.
So quality goes up, cost goes down.
Then all of a sudden you start to see, oh, now we're lowering the cost because these are different materials altogether, and we're putting them together with robotics and humans running a high-tech machine, and we're cranking them out. They're actually, let's say, safer when they travel. You have less degradation, you have less breakage, loss that way. And then they're greener because now this new technology and these new materials have allowed you to lower the energy costs of the home over time. We think it can go way beyond 30%, but those are really the new cutting edge modular and manufactured housing startup-y kind of companies, I would say. And we don't know yet because they've not scaled exactly how much the savings would be, but I would suggest it's going to be well beyond the 30% we were just talking about once it gets a little bit more beneath it. Then I would say the question you asked was like a third category of, 3D printing. And there's one major version and there's two versions I've seen. And one of the reasons it's not scaling quite as fast as it could, I think it is actually scaling quite fast now that the attention's turned on supply so dramatically last couple of years. But one reason is it's great for foundations and walls. Foundations and walls, the shape of the house, the size of the house is fantastic. And one of the things I like about it is you can customize square footage. You can even customize shape. Rick, we don't need to do right angles anymore. You may still want them because that's what you're comfortable with, but these houses can be put in new and different ways. I was in a 3D printed house in Detroit and it had a rounded hallway. It had a curved hallway. It was like super cool. Now, not for everybody, but the fact that you can do that and maximize your floor plan or maximize the land you acquired, you still have to drop in plumbing, electrical, roofs, windows, and doors. So it is really a shell at this point. And again, that's still savings. That's still faster. Think about a 3D printed on-site. On-site's the big one I was referring to. That's the major. They bring the printer to the site and it runs for 72 hours, 24/7. So you got some security guards on site. You may have a technician there during the day, but it runs 72 hours and then it's done. You bring in the subs and you bring in the other stuff. You drop a roof on it. So I think roofing, those internals are all going to be part of the story of how those scale to like really make 3D printing everywhere. And then I think lastly, cement houses seem to be pretty climate resistant. They seem to work in all climates, but there has been skepticism in cold climates, I think. So we've seen it much more in Texas, Arizona, places like that. Fewer people are trying it in Minneapolis and Detroit so far. But I'll mention one other thing. I mentioned a small company. There's the big version where the 3D printed on site. There is a company in Detroit, Citizen Robotics, that is doing modular 3D printing. So they'll print the house in 4 pieces in a factory and then assemble those 4 on site. So there's a ton of innovation in the space right now. It's just like anything. If you're operating in the physical world, the built world, you got to use technology, you got to use efficiency, but ultimately you're subject to the laws of physics.
Well, you have to wonder how quickly you can scale, and it seems to me you could scale fairly quickly. I mean, if there
Mhm.
is a 3 million home shortage in the United States, for instance, to meet the demand, let's call it 3 or 4 million. It seems like that's a pretty implementable goal. When fabricated and scaled and deployed within less than 90 days, it seems to me that you know, as an industry, you could crank out 50 or 100,000 a quarter or something, or maybe twice that volume, depending upon how many you know second source suppliers and manufacturers you partner with. But it seems very. I think the article I was reading about was the concrete production one where they did it in that 72 hours. And I think the cost reduction was something even closer to 60%. It was like 50 to 60% reduction because of when you calculate, the typical 6 to 9 month gestation versus doing it in basically 3 days. It was basically in under a week, you could basically have a home, ready to move into, barring everything else is in place. So, city sewage and water and everything else that needs to be hooked up.
Yeah,
Um,
I think I'm not yet a home builder, but I think the one you're referring to is a really interesting partnership because Lennar partnered with Icon. Icon was the Texas 3D printer I was referring to. And one of the things that made that partnership seem to work was Icon could go ahead down the block doing the 3D printing of the foundation and the walls and the shell, as I was talking about. And then Lennar could come through right behind him and drop roofs and put in those doors and windows and everything. And so you can time it. That efficiency is really important. If you've ever been on site for a site built home, a one-off custom or a site built home in an urban environment, it's fenced off for a year. There's waste all over. You got to redo the entire landscaping typically because of everything. And so I agree with you. I think they did about 220 homes, I think, in Texas. And we'll see what the outcome as a case study is. But I agree. I think there's a huge upside. Now, I think the only reason we haven't seen a come to this platform and we'll build you a house is just where the land is. We're still grappling now that the presidential candidates are talking about housing in a real way. I think that should bring some attention to this. But I think the land, where the land is, matters. And so you started with the next bell. One of the reasons I'm really bullish on upper Midwest cities that I call them the next belt is because it's where home ownership is possible for most working Americans. Now, it doesn't mean you want to move here, but 2 generations ago, 3 generations ago, people moved to be able to have a job and have a home. That was normal. If we believe history repeats itself, there is opportunity in cities where the land is and where homes can be built. And the question we don't know is culturally, are we going to move for those? It's very difficult to build new housing in Los Angeles County. It's very difficult to build new housing in San Francisco, the Bay Area. So the real question is, with the rise in remote work, employers wanting to retain talent, would they allow people to move around the country? Would they start opening satellite offices in smaller cities? I believe the answer is yes, but I do think it's not yet answered, truthfully.
Yeah, it seems to me that remote work could really support those growth goals and those expansion goals in housing. But it seems like there's a trend now of eliminating remote work and going back into sort of centralized offices. And I think that's going to potentially stymie or undermine, the zoning, the push into other markets that simply aren't presently as heavily adopted. But it is interesting. It's funny. I was having a conversation with actually a representative from HUD this morning, and I can't name his name, but he was saying that the general consensus of the conversation was the good news for all of us in this election season is housing is a huge priority, right? There are different proposals, Trump talks about deregulation and eliminating a lot of the red tape. And I think Harris has been a lot more specific around various tax credits and in different, initiatives around low-income housing and expanding, I think, 2 or 3 million new low-income housing or affordable housing objectives across the country. But the good news is they're both talking about it, right? And so, his main objective was look, on Tuesday, America wins. Housing wins, America wins, right? That was sort of his bipartisan way of looking at it, which I think was pretty positive. Um, you know, we're gonna have a messy but free and fair election come Tuesday. America wins regardless who wins the election, and then housing wins regardless who wins the election, because there's two very powerful individuals that are going to assume one role, and their focus is going to be to expand home ownership, or at least expand housing, and then create various paths to home ownership, either through renting and or just immediately qualifying for a home. So
yeah, I would say with the one minor caveat that you have to keep your promises. You say you're going to do this. Once we elect you, you have to keep your promises. And I think the two things I would tell both campaigns that I believe are bipartisan and I believe are exactly what we should be saying in the next generation is this: housing is economic stimulus, and housing is a community stabilizer. We know that stable housing improves health outcomes, educational outcomes, credit worthiness outcomes. Freddie Mac did a report, and one of the major indicators of first-time home ownership success is if your parents owned a home. Well, in this country, whose parents owned a home and whose didn't? And so, I think we should be thinking about housing as a holistic economic and community development program stabilizer because of that reason. It's good for everyone when we have more safe consumers. It's good for everyone when we have more safe customers. And we often don't think about it that way. I think because we get a little nervous calling each other consumers in some cases. But the reality is, if you own a small business, you want people living in your neighborhood shopping at your small business. That all works for everyone. So this whole not in my backyard crowd, to me, is an antiquated idea. It's an idea that doesn't understand the consumer flow of money in a community. You want people healthy, safe, and happy in your community, spending money at your business and at your neighbors' businesses, etc. And then two, I would say one of the biggest drivers is we need income. People need income to be able to spend money, to be able to own a home, to be able to do everything we did. So jobs that create houses, and jobs that create houses perform, I think, a great service to the community that I just mentioned the first part. But second, you build a house, you got property tax revenue, you got greater income tax revenue, you've got all of the things that come with development and building out other services. So it's costly for cities to maintain and serve their customers, but jobs that create houses give you second, third, fourth economic returns, because you're not just creating a job, you're creating an asset that then gives more revenue to the community as well. So to me, it's bipartisan to say that housing is economic development and we need jobs that create houses. And those two things could really drive GDP in the next 10 years. But it's still a thesis. We haven't truly invested in it in that way yet. But that's what I would tell the two campaigns if they were ever to call me, which they did.
Yeah. Well, to your point, it's not just about financing of the house, because the challenge is financing solutions, and that's really been since the Clinton administration. The focus has just been provide consumers with accessible products, financial products, right? And so that the cost of those products are accessible enough to be able to qualify for homes. But inventory wasn't an issue, and so I don't know what the housing trends have been over the years. The National Association of Home Builders say that there's about 5 million people or so who work in residential construction. There's probably, and it's about 2 or 3% of the overall GDP. If you add probably mortgage and you add real estate and you add all sort of the piece part suppliers that contribute to building homes, it's probably a 6 or 8% of the total GDP. It's an interesting driver if that were to, in essence, be doubled. Because with the amount of demand that's there, it arguably probably should be doubled. I think is your point, which would put people into new companies would form, new roles would be established, and then a new class of employees that would emerge.
And listen, I think those numbers, just me hearing it as a gut check, I think those numbers are actually slightly inflated when it comes to residential contracting and residential real estate, because a lot of people will list themselves as a commercial and residential real estate contractor or real estate construction company. But when push comes to shove, the commercial job gets the priority every time. So even though
Yeah.
you have the capability to be an on-site builder, renovator, or remodeler, you end up getting pulled naturally, why not, to all the jobs that pay more and are more stable, and those are the commercial jobs. So it's actually not easy to run a company that focuses on both and carve out enough time for home remodeling, home renovation, new home building, unless that's all you do. But we know that when that's all you do, it's much easier to do custom luxury homes, second homes, luxury homes, because that's where the money is. So I would say yes to the opportunity there. And I think people will inevitably say, hey, history repeats itself. If we overbuild, don't we have a drain on the economy with like empty inventory and this and that? But I'm actually saying the opposite. I'm saying there are so many people globally, but also in this country, interested in investing in real estate, that what we'll see this time around is net new models for dealing with that. With the last few cycles, we didn't have investors in tech companies who had made investing in real estate possible for everybody. We didn't have hybrid rent to own or hybrid earning shares type platforms. We didn't have community share platforms, and we didn't have a lot of, we could go even further into co-ownership and other types of models. So what I'm saying is we're going to actually not see a drop in home values if we overbuilt. What we would end up seeing, assuming like the income piece came with it clearly, but what I think we would see is actually a democratization of ownership. We would actually see people be able to buy into residential real estate on Robinhood, on Wealthfront, if we had enough units to justify a variety of innovative platforms and a variety of innovative ownership structures. So I don't think we're going to be left with the same problem we had before. I think we're actually going to incorporate more owners into the system if we could build enough to let that innovation in.
We're a really long way away from that. I'm looking up a study I looked at the other day that looked at all the different ways to judge the shortage in housing right now. And they said that depending on the study, the gap is somewhere between 1.5 and 5.5 million unit supply gap. So average is 3.5 million basically units too few. And in 2008, there were 1.25 million excess. So we're 5 million to 7 million, maybe even off from where we were last time we had overbuilding problems, right? So how long does it take, even with the 3D printing businesses you're talking about humming, and obviously haven't added a lot because that is not an area I know anything about. And just like to hear Jeremy Potter on a soapbox every Friday now and then. Yeah, I mean, like that gap is so big, and the geography of that gap is maybe different than our ability to fill it. So, I think it's nice to see Detroit experimenting. I bought a house in Detroit that had been vacant for something like 20 years. That was a cool experience. Oh, wow. Yeah. In 2016, it had been vacant since I think the late 90s. And through one of the projects, like what Jeremy's talking about, as maybe not the full solution, but cool little pieces in Detroit, is the Rehabbed and Ready program, where one of the, I don't even know, it was a collaboration of a bunch of different foundations, Jeremy, I don't know if you know, but it was a bunch of different foundations in Detroit were going into neighborhoods that were close to fully occupied, close to kind of stability, and taking the last few homes that had been vacant for a long time, fixing them up and selling them at close to cost. I think, I think the rehab of my home cost almost as much as I paid for it, a little bit less, but close. But that was cool. Then that block and the block next to it and the block next to it suddenly were fully occupied by owners. So that was a cool, that's probably as close as I got to any of these conversations, Jeremy, especially in Detroit. But I do think that the creativity there has been interesting, but not everyone's going to want to move. And there's only so many houses that have any vacant units. I mean, there's only so many cities that have any vacant units. Detroit was kind of solving a one-off problem there for themselves, which was great. But
so you just brought up the perfect comment to kind of like support what I meant about innovative new solutions. So here's how I would see it going. The family that does want home equity and maybe cannot afford or cannot qualify for a 30-year fixed, and let's just say the house Brock's talking about today is worth $225,000 in Detroit. What I'm suggesting is that Brock, as a renter in Manhattan, may still want exposure to residential real estate equity elsewhere, Detroit, Charlotte, Tulsa, wherever. And this family only needs, because of the monthly payment and the entry point into the credit sphere, they maybe only need $150,000 of equity on a 20-year mortgage or on a 30-year mortgage. That family gets into home ownership at a lower barrier to entry. Brock and others like him around the country invest in the other piece of the portfolio. And now a family lives in a clean, safe home in Detroit. Their monthly payment is normalized slightly because they've got other investors in the platform. And those investors are excited because I'm a renter in New York. How do I get home equity? I can't afford a condo here. I can't afford a beach house. And instead of buying a second home in the mountains or whatever, or buying a second home and trying to be an absentee landlord from far away, I'm just gonna join this portfolio and now make home ownership. Everybody gets a piece of the ownership economy. And my point is that can work. I believe. I mean, I'm not like in
arguably is working early iterations. I've been invested in Fundrise since 2017. I think they mostly do big developments where it's a few hundred units or whatever, and then they flip them at the end. So it's a little different than what you're talking about, but that's crowdfunding creating units. Yeah, for sure.
Yeah, Fundrise for single family homes is what we're talking about.
Yeah. I really like Roofstock as well.
What's fascinating to me is we've talked about this for whatever it is, 27 minutes or so. In none of these were agendas at the MBA. Like I said, I'm at the annual convention in Denver. I didn't really see, other than the equity panel that you were on, as far as shared equity and trying to, kind of reduce barriers to entry, just simply because a growing number of consumers aren't able to qualify through traditional means, through either various down payment assistance programs or just not having the capital at all to qualify for a home. But other than your panel, Jeremy, I don't really. There was just no conversation around how to solve. I mean, it wasn't a builder conference. I get it, but you need projects to finance, right? And if you want to expand the number of origination units, you need to expand the number of units to finance.
And how would these things, the fractional side, fractionals is that was kind of a boom and bust, like 2017 to 2020. A lot of companies have had a hard time since 2020. I saw that when I'm investing in prop tech for the VC I consult for, and in my own seat when I was at EasyKnock during that time and Rocket during that time. But for what you were talking about a minute ago, Jeremy, like firmly just manufactured units, how do you still have to get non-QM loans for most of those products?
Oh, fair question. So I'll say two things. One, I can't speak as much to the MBA agenda just because I didn't see as much of it as I would have wanted. We can keep talking about that if it's helpful, but like I don't know. I do know that, like, Brock, your question is the key one, which is Fannie and Freddie have done a tremendous job. HUD has done a tremendous job making the guidelines as close as possible to the regular guidelines, and they are all financeable now through the GSEs and through FHA. So the guidelines have been revamped. Redlined is probably the best way to describe it. They redlined the guidelines to make them as easy as possible for every mortgage lender that does any Fannie, Freddie, and FHA lending to lend on.
That must be quite recent, right?
Correct. Yeah.
I remember as recently as when I was at EasyKnock, we were kind of mimicking their guidelines, and manufactured was very much not on there. And that was a year and a half ago. Yeah.
Yep. So Fannie and Freddie reached over that, like, last probably, I would say 12 to 18 months, reached in to the modular manufactured community, pulled it up into their products such that it's really on mortgage lenders to understand how to deploy that, whether it's from a technology perspective or from partnerships and go to market for your sales team. I don't know if there was content on that this year, Rick, but that's a great example of something that is like, on my panel, Freddie Mac, Taryn talked about choice renovation and their choice loan program. They have popularized choice renovation and green choice. So, Fannie's got home style. And so and MH, which is manufactured housing, MH Advantage, the Freddie Mac folks and the Fannie Mae folks were in Detroit, Rick, for the ribbon cutting you mentioned at the outset. Yeah. Speaking on the opportunities here. So yes, Brock, it is new, but I think every lender should be taking a look at it. Right. And partnering with your local factory, especially if you live in those states where the factories are. I mean, we're talking states that are growing: Tennessee, North Carolina, South Carolina. Those are states where there's been tremendous influx of population over the last few years. Like, this is a great example. Lenders in those areas should be looking at this stuff.
Well, I think it would be an interesting thing to have a combined panel or a combined conference actually between builders and mortgage
financing
lenders. Quite frankly,
amazing.
Because I mean, ultimately, everything is so segmented, and there just isn't really a horizontal connection, where there should be. Because I don't know if there's any. I'm not a product expert as far as on especially on manufactured housing. I know some of the basics as far as the need for a foundation and plumbing and electrical and so on, but it just seems to me that these are just minor sort of guideline changes with maybe some assessed risk models, but it's just that
you're spot on. I mean, nothing's minor, in an LLS. Nothing's minor in these industries. Like, the mortgage industry decided to add something, but the idea that you don't need like deep construction expertise to launch this program, I think, is your point. And that's right.
Well, I just wish that there was maybe discussion. We talk about sort of privatizing the GSEs, and maybe this is the outcome of privatization of the GSEs, but it seems to me that there should be a GSE, some kind of pseudo quasi public-private organization whose focus is strictly to provide liquidity to what would be considered non-QM sort of solutions, like anything out of the standard conventional conforming sort of product sets. It's like there should be still a government backstop around these innovative solutions so that these innovative solutions could really take off.
I'm going to step a little bit outside of my personal experience because I've never borrowed money from the Federal Home Loan Bank directly. But the Federal Home Loan Bank is a GSE. Meaning they're under the authority of FHFA as an oversight body. And so to me, this sounds like a really cool opportunity for lenders to partner with the Federal Home Loan Bank and see if that's maybe a liquidity avenue. I have some thoughts and ideas on it, but because I've kind of always been just one step shy of the Federal Home Loan Bank. I don't know them personally, but there are some innovative, there's a Federal Home Loan Bank in Indiana who has an incredible down payment assistance program for first-time home buyers, first-generation home buyers. I know the other Federal Home Loan Banks are working and thinking in these spaces, so that would be one which would make a lot of sense to me. Give liquidity to lenders to specifically drive this type of development. Like I said, I'm a little bit outside of my experience, but it sounds to me like a good fit.
So what was your highlight, Brock, from the conference, at the MBA conference?
Before we change subject, I'm really sorry. I'm going to end up having to drop off a little bit early. So we keep going. I'll just drop off.
You do your highlight first, Potter.
My highlight first?
Yeah, what's your highlight?
Well, I was trying to pick up different tidbits. Like, that I didn't think of it that way. I didn't think of it that way. Those are the ones that always kind of stand out to me. And I think the two that I wanted to talk about, they're super tactical. For me, that's important because I'm always so in the clouds. One is the adoption of income, assets, and employment verification as data only. Like, watching the numbers climb. When I was at Stavvy, it was so hard to get people to understand data only. And it was still like, well, don't we have to have a docs portal? And what about the doc signing? And what about Inc? And what about these 12 states? But from start to finish, meaning people logging into Plaid or people logging into whatever system you use and actually trusting the data and keeping it data only for day one certainty and for underwriting of income, assets, and verification, and then following that through to a potential e-closing with an e-note. I know I'm an eternal optimist, but I did like the numbers I was hearing from people that they could get 40, 50, 60% of their pipeline to log into Plaid, to get the data out. Those numbers might not seem like where they should be for those of us who are like tech savvy consumers in other parts of our life. But let me tell you, from being at Rocket and Stavvy, like 60% Plaid is phenomenal on your pipeline. Like, keep going, people. That is awesome. The second thing, I was talking to the guys from ServiceLink who have an e-closing platform, and when you offer the consumer a scheduling tool to schedule their closing, it said nearly 100% of the time they took the first available slot. So let's round that up to 100% of the time. That means we're so slow and so bad from a customer experience perspective that by the time they get a chance to pick their date, 100% of the time in ServiceLink, they are picking the first available slot. That should tell us everything we need to know about how people view this process and what they really want. And if we started serving what people really want instead of what the industry needs, we would blow, I think, the numbers off of cost savings, efficiency, and some of the other things like cost of origination that people have been desperate to do. So anyway, those are the two sort of factoids that I don't like that word. I said it, but I don't think I'll ever say it again. Those are the two pieces that stood out to me.
What about you, Brock?
I'll go the exact opposite way of the tactical. Philosophically speaking, it was a lot of fun to be out there. I've seen a couple of posts to this effect too, so I don't think I'm the only one that felt this. But it felt better than just in terms of attendance, energy, even things like sponsorship budget a little bit. Or maybe I'm biased because NewZip sponsored some of our first things in the last few months. But it felt like there were really good events, really good turnouts, and that everyone there was earnestly, obviously there's been a lot of bad months lately and bad years lately in the mortgage industry, frankly. But it felt like the people that are still there want to still be there and are trying to have really, really good conversations. Overhearing top lenders talking about changing their LOS, talking about launching a real estate program with us, like big things that are big changes for them, especially for some of the top depository banks that were there. I've gotten to talk to a lot more lately since we've launched several of those lately. So I just liked seeing. I think I would sum it up by saying across a bunch of different channels and across a bunch of different cross cuts of the industry, it seemed like people were out there looking for new solutions and kind of excited about next year. There's a lot of eternal optimists like Jeremy sometimes, not earlier this year. And sure. I think myself and I think you, Rick, who are part of our job is to be excited about what's happening going forward. But I felt really good about that. And then just directly on NewZip, I guess, this is our kind of like third year going to MBA. Personally, it's probably my fifth or sixth, but for wearing the NewZip jersey, it's my second. Overall, NewZip's third, and so there was great ROI on continuing to be there, continuing to be in market. I think a lot of lenders are giving company startups, vendors, innovation, in the space that is able to survive these ups and downs and even grow in these ups and downs a lot of credit. I think we're kind of a lucky beneficiary of some of that. So I've spoke to every large lender in the market, basically, that we wanted to, which was a lot different than a year ago, a lot different than 2 years ago. It was fun.
Good to hear. All right, I got to drop. Make America Detroit again. I got to go.
Any comments on RESPA? I know you had any closing comments on RESPA?
10 seconds on RESPA. Go.
No, we're gonna. I think we should do the whole next week on it or something. Maybe next week or the following, because there was a lot of conversation. We got to do the MBA's RESPA opinion. Brian Levy helped author that, so I want to talk a little bit about that. And then one of the themes we'll do a Mike Greenberg teaser coming up after the next week for our next episode. Is hiring a real estate agent as an LO the future of mortgage banking? That would be my teaser for next week, because I think that's how we should talk about. We got to talk about RESPA overall. That's just one tiny little piece.
Let me know if there's any guests you want to invite for that episode.
You got it. Sounds good, man.
Good deal.
Take care.
Take care, brother. Brock, no, I think we can wrap up. I think that my highlights for the NBA was obviously your dinner. I think was exceptional. I think Audie's done a great job. It hadn't occurred to me that that was his first NBA conference, and I think he did a good job.
It wasn't his first, but it's like still new to him. He did like 12 or 15 years going to real estate conferences, and this is like year 2 or 3 going to mortgage conferences. It's a whole different beast.
I think the dinner was good. The conversations were good. I think you had a good cross section between Own Up and cross country and NFM, and I mean there was some really good leaders at the table.
Cooper,
Julian was there.
Yeah.
What's that?
Yeah, Mr. Cooper and Greg, who came from Open Door. Like so there's some prop tech, servicing, originator. Yeah, we were really happy with the turnout, and thanks for your help with it. Yeah.
No, of course. The but yeah, my what is your take, actually, to switch gears from the NBA bit, is on the Nerd Wallet and the acquisition of the broker shop? That seems I had actually heard of that confidentially about maybe three months ago, that deal had essentially closed, but had not been made public, and then it was, of course, made public today. What was your take on it? My take is just every time that there's further integration between verticals, between lead aggregators, lead distributors, or becoming lenders themselves, it's such a logical, obvious connection to be able to do that. And we saw that with Zillow a few years ago, and of course now you're seeing that with NerdWallet. I think that it's a no-brainer. I think a lot of companies that deal with consumers directly should be getting licensed as an originator to really capitalize on the full extent of that relationship.
Agreed. Yeah, I like it. It's a different flavor of something that's happened a lot of times over. When I was at Rocket, they acquired LowerMyBills.com. They were a longtime buyer of that media, sponsor of that media, appearing on that rate table, whatever you want to call it, lead buyer. And so I saw a different angle of that. The huge mortgage company buying one of the lead sources that they worked with. This feels kind of like the opposite. The Nextdoor was probably featured in NerdWallet somewhere already, and they had some sort of amicable partnership going, I'm guessing. I don't know that for sure. But I like it. I think I'm slightly surprised they did a broker rather than a lender, but that is easier and faster, and they can probably monetize it a little easier. And certainly easier than buying a depository bank. It's I like it. You think about some of these companies, like it's a good example, like MRC owns a few different or is in a family of companies with a few different mortgage companies. Bankrate under Red Ventures has Sage Home Loans. MRC has Veterans United and Neighbors Bank and a few others. So it's not an uncommon model to merge those things closer together if the economics are working. This is definitely a different flavor of it, though. I like NerdWallet getting a little more aggressive. I wonder if it's sort of, I don't think they're really well respected as a media institution, but they're not one that seems to be incredibly active in the mortgage space. They're full spectrum. I wonder if it's any kind of shot across the bow that they're going to go a lot deeper here and spend a lot more time in mortgage strategically. That would be interesting as well. But yeah, overall, I like it.
That's great. Yeah, no, I agree. I think it makes a lot of sense, and I think like I said, if you have figured out, if you're a technology company that's figured out how to get in front of the consumer, of course there's a lot of money to be made in just passing off leads, but there's just a lot of money to be made as well by originating those leads. It is a different skill set, but if you acquire the right partner to exploit that skill set, I think it amplifies the revenue opportunities, substantially. Because the cost of acquisition is substantial. I mean, there's so much money that goes to LOs for that cost of marketing, the cost of lead acquisition. To be able to do that through technology is a really smart.
And those companies are in an interesting spot with the compliance changes coming in. What is it, late January or February? where you're only going to be able to sell one lead one time, right? One lead, one lender for any of these companies that are and I know certainly NerdWallet does a bunch of other things, a bunch of educational content, but to the extent that you think of them as like a lead publisher, maybe they think that instead of selling to several different lenders, that they need to up their economics for sending it to one, well, I guess in this case broker, but one originator. And I wonder if other people will, will someone like LendingTree, or will someone, some of these other companies that make their living on mortgage leads try to deeper integrate, whether that's an acquisition or being acquired or JVs or something else, so that they can deepen their economics. I'm not sure.
Well, good. Well, let's look to next week and the rest of the conversation. I think that's going to be an interesting one, and we'll go from there. But have a good week, and my gosh, next week we're going to have a new president, so we'll see how that pans out. But I'm sure it's going to be an exciting time for housing.
Yeah. Sounds good. All right, have a good weekend.
Hey, take care, man.
See ya.